Many of our clients' initial question is how much do they need to start investing? That, of course, is a personal choice. However, I always show them one of our best low risk strategies that they can use to earn significant income while keeping costs low. Let me quickly show you an iron condor. Let's start with what exactly is an iron condor. Have you ever looked at a stock and it looks neutral and you aren't sure what direction it will go? Quite possibly, an iron condor could be an option as it is a neutral trade, meaning you just need to stop to stay in a certain area for you to make money. It can continuously move up and down, but as long as it stays in your area, in your zone, you're good. This trade should be done mainly when that stock has a high implied volatility, but I won't dig deep into implied volatility in this video. There are tons of resources for that topic. Lastly, it is a multi-leg trade, meaning there are multiple trades in one trade. So there are different pieces to the overall puzzle, but it's simpler than I'm making it sound. Let me start by saying in this video I will not be taking a deep dive into the numbers and strikes for an iron condor. However, visit poweroptionsgeek.com and our POP program for a deeper dive. Okay, now before I show you what it looks like, let me first show you real examples of iron condors. In image A, we would only be risking $50. So that's the max you can lose. However, you would have the possibility of making $200. That's a great ratio. I would just need this stock to stay in between $10.50 and $17 to collect some type of profit. In image B, we would be risking $90 with a possible profit of $400. So that's a little bit more money invested, but your max profit is also higher. Same range as image A, so in between $10.50 and $17. Lastly, in image C, you're risking $500 with a possible profit of $2,000. So you see three different levels of risk with this trade, and obviously you can go even higher. This is typically how an iron condor would look when you trade, but I want to give you a better visual of it so you know how it works. So let's see what it looks like. In the image A example, or the $50 example, here's what it would look like. The green area is where you want it to stay to earn close to $200 max profit, so in between your 12.5 and $15 strike prices. If the stock starts to move out of the green area and into either yellow area and stays there, you'll still profit, just less than that $200 max profit. If the stock starts to leave the yellow area, that's when you start to see the losses out of that $50 you invested. However, you can close this position before you lose the entire $50. Looking at image B or the $90 example, same scenario. You want to set up the iron condor wide enough to give yourself wiggle room for the stock to move around a bit. And a little hint, you can use your delta Greek to find the best strike prices. In this example, the green is where you want to get that max $410 profit, but a little disclaimer, you often never see the complete max profit. It's usually less than what is listed, but you have to decide when you want to close a trade if you are making money on the trade. And quickly, last example for image C. Same scenario, all three trades are similar. We are just risking different levels of money on each trade, therefore changing our possible profits. This one is a $500 trade that we risk and our $2,000 max profit. And it's the same scenario as the other trades, just risking more money. So to give you one more example, I actually entered into the $90 trade on my live account. With the stock trading at 12.77, remember I needed it between 10.45 and 17.05. And after 2.5 weeks of holding this stock, with the stock currently trading at 12.77 and the implied volatility dropping after I entered the trade, I currently have a profit of $255 on this iron condor. Lastly, to follow up, you want IV rank to be high when entering an iron condor. I realize not everyone may know what IV rank is, but I encourage you to research or visit poweroptionsgeek.com. The sweet spot expiration date when picking an iron condor is 30 to 45 days out. Strikes in your iron condor should be wide enough to cover any expected movement, but not so wide that it lowers your max profit significantly. The main thing you want is implied volatility to fall after you enter the trade, so focus on getting into the trade when IV is high. And you typically want to close this trade with 7 or more days remaining, as to not risk having part of your iron condor assigned, which is a topic for another day. Hopefully this video helps.